Hey everyone, welcome back to Thoughtmosphere. So today I'll be giving a quick rundown on the different types of technical indicators that I use, and hopefully that would come in handy for your decision making process as well. So I'm gonna start off with the RSI, which is the Relative Strength Index. So RSI is quite straightforward. Most people only use it as a means of looking at when it's oversold or overbought. Specifically when it's above 70, it's overbought, and when it's below 30, it's oversold. But that's just the basic way of using it. I like to use it one level higher by looking at divergences. So divergence is basically when RSI represents the flow of where the price will eventually go. So if the RSI, right, is going down, let's use an example on the weekly on Bitcoin. So this was a clear-cut signal that the price of Bitcoin will eventually stop going up. Right? If we look at January 4th, we had the RSI hitting an insanely high figure of 94. That's when Bitcoin went all the way up to 38k. The stochastic RSI also showed that it is very high. It's basically maxed out at 100. And then Bitcoin had a little correction to down 30+% before it went to its next rally. Right, I think around here, Tesla basically announced that they were buying Bitcoin, and that created a rally. So the next high that it hit, you notice that the RSI actually formed a lower high, right? It is actually lower than the previous high, although the price is higher. So this is the first instance of a divergence, and usually you want to have at least 3 points of divergence for it to be confirmed as a divergence in my opinion lah. So we had it hit all the way up to about 57k, and then we had a minor correction down 25%. And the Coinbase IPO was launching, so Hopium was at all-time high. Everybody assumed that the Coinbase launch would skyrocket the price of Bitcoin by legitimizing it even further. So when Coinbase IPO'd, it was around this week, the price hit a new high, but you can see the RSI actually hit a lower high again, thus forming a triple point bearish divergence, because the RSI is actually going lower while the price is going higher. And typically, it's often a buy the rumor, sell the news event. When you have a lot of people buying into a speculative rumor like Coinbase IPOing, that's not really a rumor, it's a fact, but it's such a big news that after the event is over, it is very likely that a lot of people will want to take profit. So when Coinbase launched, that was basically more or less the high point. I can't remember when it launched, but there was another high around here on the 5th April, the month of 5th April. That might be Coinbase IPO. I can't remember the exact date of Coinbase IPO. And then you notice that the RSI again made another lower high. So actually this is a 4-point bearish divergence, which further cements the fact that it is unsustainable. The price is simply unsustainable. It cannot keep going higher. So the price will eventually follow where the RSI is going towards. And if the RSI is going down, the price will eventually go down. And that's what we saw in the coming weeks. We had a super steep correction, I think down like 50% or 55% from top to bottom, which is an insanely steep correction. And the RSI has finally now reached a low point, lower than 50. So it's approaching a point where it's fairly neutral. Yeah, it's neither oversold nor overbought. And the stochastic RSI has also went all the way back down to its very low point. Yeah, so I think it is almost bottoming out. We might need 1 or 2 more weeks to show it fully bottom out before we can go to a new high. So that's basically the RSI. I like to look for divergences, and you can also see a divergence on the daily time frame. Of course, if you have it on the weekly, the longer the time frame, the more accurate the prediction is likely to be, but also potentially the longer it might take to play out. Yeah, so whenever you're in doubt, the saying goes, when in doubt, zoom out, and you look from higher time frames to lower time frames. But even if you look at the lower time frame on the daily, you can also see a divergence, right? From 8th of January down to 21st February, down to 13th April, we are constantly creating a lower RSI. I mean, yeah, the RSI is hitting a lower high while the price is hitting a higher high. So it really shouldn't come as a surprise if you are a technical analyst who looks at RSI to see the price of Bitcoin potentially crashing. But the surprise could be how steep the crash was. That certainly was a surprise. Most would have expected it to bounce at the 200-day moving average at least, if we were in a very strong bull market, but that didn't happen. So that was quite surprising. So that's the RSI, and that's you can also use it on the flip side, which means a bullish divergence, which is what I want to look at today as well. So if we go to the 12 hour, we can actually see the RSI creating a higher low, while the price is actually getting a lower low. So this shows that the price action right now is unsustainable, right? It cannot keep going lower and lower and lower, while the RSI is creating a higher and higher low. Even on the daily, this is apparent. If we end the day in the next 14 or so hours, then you will see that the price has actually hit a new low in terms of the closing, and the RSI is actually looks like it will most likely create a higher low. You can see there's an upward trend here. So this in mind makes me feel that we are most likely going into a consolidation period right now. The stochastic, so that's basically it for the RSI. The next one I want to talk about is the stochastic. So the stochastic RSI is kind of like a derivative of the RSI. It's just the RSI of the RSI. So it's a lot more swift compared to the RSI. It goes from 0 to 100 a lot quicker. And this gives you a good idea on when to enter and exit. So sometimes when I want to buy any token, or sell any token, I look at the stochastic RSI on the 12 hour. That's my favorite time frame. The 12 hour basically gives you an idea between a couple of days or within the week when it's a good entry or exit timing. And I use that to time my exits and entries. You can use other time frames if they are more suitable for you, but I just find 12 hours to be something that I like because it goes up and down within the range of a couple of days to within 1 week, and it's good enough for me to time my entries. So whenever the stochastic RSI is at 100, this is typically when I want to be going not bullish. Let's just put it that way. Yeah, it doesn't mean I will sell, it doesn't mean I will short, it just means that I don't want to be overly bullish. And when the stochastic RSI is at 0, it just means that I don't want to be bearish. But you can see sometimes in extreme market conditions, they can stay low and they can stay high as well. So all indicators are wrong, but some are useful. And if you combine multiple indicators together, you increase your probability, or also known as having an edge. So in investments, you want to make sure that you have an edge over others, and using multiple indicators the right way allows you to have an edge over time. You might not always be right in the beginning when you first start, but hopefully the law of large numbers can work in your favor if you are using it the right way, and you should have an edge over time in the markets. So the stochastic RSI on the daily is pointing down, and that tells me that most likely we are going to hit down again. But I don't think that we're going to get too bearish over here, because the RSI on the weekly and the stochastic RSI is already quite low. So I foresee a consolidation. And where's the range of consolidation? I'm thinking between 25k to 45k is my consolidation range to be safe. Can we go beyond this range? Definitely, but I just don't think we can close the wick within outside of this range, unless something really major happened in the macro markets. Yeah, like another black swan event. Like I think the repo situation, the reverse repo situation in the financial system is showing signs of breaking down again. So if they were to break down, I am 100% sure that Bitcoin will crash horribly again. Yeah, but until that breaks down, I don't think Bitcoin will go beyond that range. Yeah, so I think I'm just going to have one last indicator that I talk about, and that is this colorful band that you see here. You can see there is this red band, this orange band, this gray band, this blue band, and this green band. And this is basically the Mayer multiplier band. So if you go on to TradingView, right, and then you type in MMB, you'll see Mayer multiplier bands. I can't remember which is the exact one that I use, but I changed up the colors so that it's easier for me to understand. And basically when, similarly you want to zoom out, because the further you zoom out, the more accurate the indicator is. So if you look at Bitcoin, and we're just going to use the BLX instead because that's a much longer history of Bitcoin. Every time Bitcoin enters the blue band or the green band, it's basically buy the dip, right? The green band is sell everything, mortgage your house, refinance your house, take everything, sell your house even, and throw it into Bitcoin. Not financial advice, obviously. The blue band is basically buy as much as you can. Obviously, throughout, you have to average it out depending on your strategy. Like, don't one lump sum in, but in fact, actually, blue bands are very, very rare. So it might actually be a good idea to lump sum when we enter the blue band. Because if you can see throughout history, every time we enter the blue band, we don't stay inside there for more than 1-2 weeks. So it might be a good idea to lump sum when we're in the blue band. If we're in the green band, which has only ever happened on Black Tuesday, right, March crash of last year, yeah, that's really the time to be very aggressive when everybody is panicking. The grey band is neutral. It's where you can either buy a bit when we are closer to the blue band and sell a bit when we are closer to the orange band above, or basically just stop buying when we are above the midpoint of the grey band. Yeah, there's another, there are different ways to dollar cost average into Bitcoin. That's a video that I might talk about in the future, but these bands can be a way to look at your risk level when you enter them. Think of the green band as lowest possible risk level, the blue band as very low risk level, the grey band as neutral risk level, the orange band as high risk level. So if you were to buy Bitcoin in 2019, right, where we entered the bubble, the orange band, which is what I also refer to as the bubble area, because if you use this Mayer multiplier band against traditional assets and equities, yeah, there are other asset classes other than crypto, right? If you look at traditional equities, every time they're in the orange band, it usually goes down from there because it's kind of in the bubble territory. And when it goes into the red band, that's what I call the hyper bubble zone. So the hyper bubble zone is definitely not where you want to be buying. If anything, you want to be selling in the hyper bubble zone. And when we are above it, right, some might think we are going into space, going to the moon, but it's actually when you should be aggressively selling, right? That's what the black area means. It's like you want to just keep selling aggressively. So right now you can see that Bitcoin actually went into the hyper bubble zone for a while, and this is definitely a place where you shouldn't be buying anything. You should be selling actually, and we have since corrected back down into the orange band, which is the bubble zone. So it is still possible that Bitcoin goes further down, but we are in a bull market and bubbles can last a long time, right? The stock market should know that very well, and I believe we will consolidate in this bubble zone until we have our next leg up. Yeah. If you're wondering what is this thing, it's another indicator which acts similar to the Bollinger Band, but custom built for Bitcoin. And basically, if this touches whatever end of the bands, right? If the price touches whatever end of the bands, you should aggressively buy or sell depending on your risk tolerance. Like if we are up here, if we go all the way up, it would actually be at 135k, and that's assuming we go all the way up today, right? If we go all the way up today at 135k, I think it's not financial advice, but probably a good idea to sell like everything. Maybe not everything, maybe at least a substantial amount. And likewise, if we go below this band, it's probably a good idea to buy some. So when it's very high, it's a bubble, and the saying is never let a good bubble go to waste. You want to be selling in a bubble. And when it's super low, it's a crisis, and the saying is never let a good crisis go to waste. So you want to be buying in a crisis, also called crisis investing sometimes. So these are some of the indicators that I use that I thought might be useful to share. And there are, if you can see, there's actually a lot of other indicators that I use, which I might talk about in the future. But these I think are pretty easy to understand and are really useful in daily scenarios. Yeah, so I think that's about it for this video. And yeah, if anyone has any other indicators they want me to look at or talk about, you can leave them down in the comments below. Hope you guys found this useful, and see you guys in the next video. Thank you.